morning. Thank you for joining us on the program. I am Bisi Adebayo. Let's begin with oil prices, which fell for the first time in 4 days on early trade today, pulling back from as much as 5-month highs as mounting coronavirus cases worldwide and the United States undercut market confidence in a pickup in fuel demand. Brent crude was down 0.4% at $44.27 a barrel. And US WTI was also down 0.4% at $41.53 a barrel. The contract ended Tuesday trading 1.7% higher, and that's its highest close since late July. Coronavirus cases continue to rise in the US, and deaths are at more than 1,000 a day, while dozens of states have had to pause or scale back plans to reopen their economies. And back home now, South African retailer Shoprite on Monday announced a potential divestment from its Nigerian operation, Retail Supermarkets Nigeria Limited. Now, that announcement created numerous reactions as there were no clarity to ascertain if the retailer is leaving the country or not. This next report takes a look at the issues and implications in any possible scenario. Retail Supermarkets Nigeria Limited, a subsidiary of Shoprite International Limited, caused a stir when information about their planned divestment was released in the company's operational trading update. What caught the reader's eye is this portion that says Retail Supermarkets Nigeria Limited may be classified as a discontinued operation when Shoprite reports its results for the year. This news went agog. And then came another memo saying that they plan to make the company wholly Nigerian.
Shoprite is a South African company that actually markets goods and retails goods across Africa in the name Shoprite, right? So the brand Shoprite is a retail outlet, but the company that owns it is I don't know exactly what it is called. Now, to the extent that it was an incorporated company in Nigeria, and it's now divesting part of it, or actually asking Nigerian investors to take part of it. So two things: one, to share risk, and two, to reduce their exposure. It's not a good sign.
Shoprite, which has been in Nigeria for 15 years, operates about 26 outlets across the country with about 2,000 employees who are mostly Nigerians. And this announcement is a major concern for many industry players.
The retail sector has a major import component. And as a foreign investor, remittances needs to be made, profits needs to be repatriated and all of that. And if you're operating in an environment where there is a very serious foreign exchange liquidity crisis, that can be a problem.
Shoprite is a flagship retail outlet in Nigeria and has been the major anchor tenant for shopping mall developers in Nigeria. Some argue that whether Shoprite is leaving or not, it's time Nigerians learn to invest in Nigeria.
The truth is that we need investment, international investment, domestic investment, portfolio investment, diaspora investment. The investment is what we use to build what we call gross capital formation. It is that we use to employ people. It is that gives you what we call the investment multiplier. So if our total investment is 120 or 140 billion, and there's a multiplier factor of X, you'll be getting an income increase.
Shoprite joins two other South African retailers, Mr. Price and Woolworths, who have announced their exit from Nigeria due to a harsh operating environment. And that brings us to our conversation today, which centers around domestic investment, which is one of the economic processes that countries attach great importance to for economic growth. However, Nigeria's domestic investment is said not to be growing over time. And with the recent announcement of a plan by Shoprite to exit the country, many believe that it's time Nigerians learned to invest here in Nigeria. But let's talk more about this with the development economist and the chairman, Pan-African Development Corporation, Mr. Odilim Enwegbara, who joins us from our studio in Abuja. Good morning, Mr. Enwegbara. Thanks for coming on the program. I'm sure you saw that report now. For some people, whether Shoprite or not, Nigerians should actually invest more in Nigeria. What's your take on that?
Let me start with Shoprite, because since 2010, I've been studying Shoprite. And I will tell you that Shoprite did not come to Nigeria to stay for so long. it came to take advantage of the loopholes in the economy, especially in the retail economy. And once it sees that it can no longer take advantage of that because there are more Nigerians entering into the retail market, and also Shoprite is already aware that the era of physical stores is increasingly being over, and online shopping will replace it, especially with COVID-19 fast-tracking it. So Shoprite is making a strategic decision in its own interest. And why should Nigerians be bothered? What Shoprite has been doing since 2005 is to go around China and South Africa, bring cheap goods and market them to Nigerians and repatriate the profit. There's no value proposition that Shoprite brings to the economy. There's no value addition Shoprite brings to the economy. So why are we actually saying things that we are supposed to be actually celebrating?
How about the Nigerians that are actually employed by Shoprite? Because you're saying that there's no value that, you know, Shoprite is bringing to the economy. Well, look at it in terms of the employment that it has created over the years.
I think we have to be very careful here. We are talking about small businesses that are supposed to employ millions of Nigerians that have been priced out of the market because cheap goods from China and the South Africa displace them. And they are telling me about 2,000 people. 2,000 people are the number of people a small company can employ. So let's be realistic here. Unless we don't want to industrialize this country, unless we don't want to create jobs, unless we want to continue to export our currency, our forex, and in exchange for poverty. So I'm against this job creation. Shoprite, tell me the Shoprite facilities in Nigeria. Shoprite has built no shops in Nigeria. Shoprite does its operation, including its office, on rented facilities. If Shoprite came to Nigeria to stay, Shoprite would have invested in small businesses in Nigeria so that those small businesses would be supplying over 70% of its goods, the goods it sells. If that is the case now, Shoprite will not be under pressure to need forex. Shoprite is the major consumer, if not one of the major, if not the major consumer of forex in this country. So why should we encourage such? Let Nigerians take advantage of that. I will tell you for sure that look at Amazon.com. Amazon.com has replaced Walmart. And whether you like it or not, any Nigerian investing in Shoprite is making a very, very bad investment decision. Because in the next 3 or 4 years, we phase out physical stores. Whether you like it or not, in the next 3 years, with COVID-19, we phase out.
Where does this leave us in terms of attracting foreign direct investment into the country?
I like that question. No country has been built or developed by foreigners. If you look at American history, America in 1792, Alexander Hamilton, who was the first Secretary of Treasury, decided that they will block imports so that American infant industries will spring up and compete with the British companies. And so it goes on and goes on all countries. So this issue of foreign investors, we have enough local investors. All we need to do is to motivate local investors, and they will take over these things. Nigerians are highly gifted people. They're entrepreneurs. They're big businessmen, big risk takers. The problem is the environment for them has been very, very hostile. And I think this government is doing something fantastic, especially the MFLA-led CBN. By intervening with a special fund, interest-free, collateral-free, to give to small businesses. That is the route we are going to follow. Another thing is to make it difficult for foreigners to take over our market so that local competitors will participate in the market. And when they do that, they really create jobs and sustain the economy. So for me, as far as I'm concerned, we are going to take this is a blessing in disguise. I want all of them to leave so that Nigerians will fill in the gap. And Nigerians can fill in the gap when the enabling environment is created. One, we have to make sure that... That's your own
opinion that you want them to leave. But it's also important to know that, of course, we also want to attract foreign investment into the country. But tell us now, what's the state of domestic direct investments in Nigeria today when you compare with foreign direct investments?
You see, the problem, that's what I'm trying to explain to you. If you create an enabling environment for Nigerian investors. For example, I have always said it time without number that we must move away from dirty float of Naira to clean float of the Naira so that people will now, Naira will be determined by market forces. When you do that, you now encourage investors, local investors, to know that the value of the Naira is determined by goods and services that for the market forces. Another thing is the ability to allow Nigerian investors to take advantage of the huge consumer market. If you open your market up, as we have done over the years, foreigners will come in with cheap goods and services, and continuously, because it's easier for them to bring in these goods than to make them locally. It is easier for them to displace our local investors and discourage them. And one of the local investors, I'm investing in COVID-19 products. I'm investing in agro businesses. And I will tell you that the fierce competition that comes from overseas is too much. But if it is a local competition, you will find a way to adjust, because you're competing at the same level. But if the cost of money in China is 0.01% and cost of money in Nigeria is 30%, how do you want a Nigerian manufacturer or producer to compete with the Chinese, or South Africa, where it is about 6 or 7%? So these are the things that I will tell you that this government is doing. For example, I like the CBN intervention. And also, I want the Ministry of Industry, Trade and Investment to intervene in this area and come up with a national policy of trade diplomacy, so that we stop foreigners from coming here and set up a retail trade and bringing goods from their own country and displace our local, both the local shops that actually market in their communities and both the manufacturers of these goods. Tell me how many companies Shoprite has actually had equity in order to groom them up and in order to take advantage of their supply chains.
But we also have Nigerian retailers who actually bring in these goods from China as you speak. What would you say about that?
That is where I've been telling the Ministry of the Fiscal Authority people, we must not continue to have our cake and eat it. We must not continue to pretend that we must have our cake and eat it. We must make it difficult for imports, because it is when you make it difficult for imports that the local producers will go back to work. Remember that during the Nigerian Civil War, there was nothing coming to Biafra. So Biafra has to adjust and created everything themselves. We must go to that, because that's what China did starting from 1982. And that's what India did also. That's what South Korea did in 1962. And many countries have done that. Why should we want to have our cake and eat it? We must make it difficult. I need a bill from National Assembly that will make it that you cannot display in your shop, no matter the shop, over 20% of imported goods. It must be 80% locally made goods, and then you can take 20%. That way, you see people going to small businesses to partner with them to produce this and that, orange juice, that and that. But you see, when you allow foreigners to bring finished goods, what you are doing is that you are discouraging local production, and you are encouraging importation. And especially when the forex is artificially kept strong. Because actually, when the CBN intervenes in the forex, CBN is actually strengthening the Naira artificially. So let's allow the Naira to float, what we call clean floating. Let it clean float, so that there will be competition on whoever gets Naira at a certain rate, knows that's the market value, and he knows that tomorrow it might change. So that's what I'm saying.
But how much of local production can actually go on in the country, looking at the environment? Do we actually have an enabling environment for local production to thrive?
You see, I've given you an example, so I don't know how I'm going to repeat myself. But what I'm saying in essence is that if government should encourage, as CBN is doing, and I want the Ministry of Industry, Trade and Investment to come up, we need an equity bank. We need an equity bank that will invest in small businesses. As soon as you have because what we have been having in this country is debt investment. Commercial banks want you to bring your great-grandma for you to get a loan. And they bring all the things you have to get a loan, and they don't care whether you succeed or not. All they care is to take over your assets and things like that. But when we have an equity bank, and that is what all the countries are moving towards now because of what we call knowledge economy, you see government participating in the economy, having equity in businesses that will become blockbusters. And as a result, so many Nigerians will go into entrepreneurial business because they will see a partner waiting for them. But the problem now is there's no partner waiting for Nigerians. If you go to bank, they will make mockery of you for most. They frustrate you, and you get out and you go join those who trade. Because what banks do is to give you money to go and trade. They don't give you money to go and produce. So these are the adjustments I want to take place. And I'm very happy that the Ministry of Industry, Trade and Investment is doing something towards this. And the CBN intervention must be moved from being CBN intervening to a new bank that will actually understand the intervention must also be followed up with technical, managerial, and the market support to those who you invest your money in. That's the only way we can go. Any other thing is, we will be speaking grammar. Any other thing is academic. And I'm very sorry to tell you this, because this is what we have been doing in this country.
Now, we're still talking about the efforts made by the authorities so far, from the fiscal side to encourage local content to the monetary authorities that have been promoting local investments domestically lately. How would you assess these initiatives so far?
Oh, fantastic. Look, I'm a critic of any government that does not do well. When this government started in 2015, I gave them that. I said, let's give them some time to see what they could do. And over a period of time, I saw bad policies. I criticized the government. I continuously criticized. Now I'm seeing new good policies, and I'm now in bed with the government. And the people will say, Odilim, why did you change? I said, I don't change. My opinion remains. It is when a government policy changes towards my opinion, and that I have no option but to join the government. So this government is doing fantastically well. What we need to do is to create more incentives for small businesses, reduce the tax burden on them, and of course, ensure that imported goods are made difficult to enter this country, no matter who is bringing it in. And of course, the monetary policy people must put pressure on banks to reduce interest rate. If they do not reduce interest rate, what CBN is doing, CBN should work with the investment ministry to ensure that a new bank is created. That bank is Equity Investment Bank of Nigeria, which will be the hub of all small businesses that have great ideas, that want to turn their ideas to big products and services. That is what we need to do. And we must do it the earlier we do it, the better, because a post-coronavirus economy is going to be a knowledge economy. It's going to be an e-economy. It's no longer going to be the traditional economy where you produce and keep in your store, you transport it and keep it in your warehouse. It's going to be e-economy. People will go online and do all the things they want to do, shop from anywhere in the world. And of course, you know that very soon African economy will become, there will be free trade across Africa. It is time Nigeria did something to ensure that Nigeria is a major competitor in Africa.
Now, how sustainable are some of the investments that the CBN has supported today?
It's a fantastic question you ask. I'm a supporter of CBN, but that's why I'm saying that CBN, you have to be very careful, because MFLA has good intention, and there's no doubt about it. I'm really impressed with his unconventional approach, which is what America is doing. So many countries are doing it, and he has actually scaled through and do that. But the problem is that it has no legal teeth. So there's a need for CBN, Ministry of Finance, and Ministry of Trade and Investment to sit down and ensure that they move this away from CBN. Because CBN is a regulator. A regulator is not a player in the same field as he regulates. So I want a possibility of a bank that we do these things CBN is doing, because we can never rely on commercial banks. We can never, because they are disappointed and they continue to disappoint. But also, it's not their fault anyway. But I won't blame them, because they are dealing with investors, depositors' money, and the depositors and investors are looking for maximizing their profit. But be it as it may, and because it's a fractional reserve bank, it is just keeping a fraction of the deposits and goes around to chase easy money, easy profit. So what we need to do is to bypass them, and CBN has done that. But we have to solidify that by creating a law around it and make sure it is moved away from CBN, so that CBN cannot be a regulator and a player.
All right, Mr. Enwegbara, please hold on to your thoughts. We'll continue this conversation in just a moment. Welcome back. We still have development economist and the chairman of Pan-African Development Corporation, Mr. Odilim Enwegbara, with us talking about domestic investments in the country. Mr. Enwegbara, thanks for staying with us. Now, do you see the completion of some of the ongoing capital projects, such as the AKK gas pipeline, the railway projects, the Presidential Power Initiative, mobilizing DDIs in the future?
This is a beautiful question. But let me say it in this way. I'm a pro-private sector. Look around the world, no major nation is dependent on government. Because government is not a good investor. Government is not market-driven, profit-driven. Government is politically driven in its investments. So I think what we need to do as a country, because time is no longer
All right, we'll continue the conversation with Mr. Enwegbara in just a moment, but let's just do a quick recap of the crude oil market. Of course, down today as mounting coronavirus cases worldwide and in the United States undercut market confidence in a pickup in fuel demand. Brent crude was down 0.4% this morning at about $44.27 a barrel, and US WTI was also down 0.4% at $41.53 a barrel. That contract ended Tuesday's trading 1.7% higher, and that, of course, has been the highest close since late July. Coronavirus cases continue to rise in the United States, and deaths are at more than 1,000 a day, and dozens of states have had to pause or scale back plans to reopen their economies. All right, while we wait to have Dr. Enwegbara back on the program, let's just touch up on activities at the Nigerian equities market yesterday. Of course, the all-share index rose again 0.31% at 24,841.94. And this was driven by gains from Nigerian breweries, some Chairman banking stocks, and Seplat. And as a result of those positive sentiments, we saw the month-to-date gain increase to 0.06%, and year-to-date loss moderated to minus 7.5%. We have Dr. Odilim Enwegbara back with us to continue the conversation. Earlier on, you were talking to us about some of the ongoing capital projects and the role that they may possibly play in encouraging more DDIs in the country.
Yes, the question could be, somebody could reverse it and say, why is it that the Gencos and the Discos are not performing if we have to privatize? But I will tell you the problem is that when government was privatizing the Gencos and the Discos, actually politicians presented their fronts to buy those things without the technical and financial muscles. So I think that going forward, we must sell off all these things. I'm a believer in private sector because government is politically motivated in its investment. Now, what are you talking about? How should you continue to build roads when you could actually build a system that make people to pay while they use the road? Each road they use, they pay for it. And the investors will see the profit, the profit margins and invest in this. And we have world-class roads like anywhere in the world. Government cannot build the 21st century roads. Government cannot build 21st century rails. Government cannot build the 21st century airports. Government cannot build the 21st century hospitals or universities. We must privatize all these things. But a strong regulatory system must be in place that is politically blind, so that private sector Nigerians will enter into the business knowing fully well that they're competing among themselves. They're not competing with the government. That's not a profit maximizer, not profit maker.
We would like to thank you, development economist and chairman of Pan-African Development Corporation, Mr. Odilim Enwegbara, for speaking with us on the program.
Thank you for having me.
Right now, the increasing rate of youth unemployment before and during the COVID-19 pandemic is often seen as one of the most significant challenges for economies both in developed and developing countries. And part of the reason surrounding unemployment in Africa is the lack of skills. And this speaks to the projections of US-based consulting firm Conferry that sees the demand for skilled workforce exceeding supply worldwide by 2030 and possibly resulting in an overall global talent shortage of more than 85.2 million people. Now, as stated in a report by PwC, despite rising business confidence equating to more jobs, organizations are struggling to find the right people to fill these positions. Well, the monitoring and evaluation specialist at Odilim Nigeria, Olufemi Balogun, joins us now to hold this conversation on how to close the skills gap, especially right here in Nigeria. Good morning, Mr. Balogun. Thanks for joining us on the program. A global PwC survey of more than 1,300 CEOs in 68 countries found that CEOs in Africa, of course, 96% of them, are most concerned about the lack of skills. Tell us how we got here.
Thank you, and thank you for having me, and good morning, everyone. I think there are many reasons why we got here, but the dominant narrative around it is the gaps that exist within our education system. So the curriculum particularly does not prepare young people effectively to take up jobs in the world of work. And now the world of work, has been shaped and increasingly being shaped by the dynamics of globalization and technological advancements. And, COVID-19 has come to accelerate all of this. So there are gaps in technical abilities, there are gaps in soft skills abilities, as well as digital skills. So that's where, the dominant narrative around why employers are finding it difficult to find the right talent these days.
Now, today we see employers struggling to find the skilled workers and graduates find it hard to meet the criteria even for entry-level jobs. Yet, these CEOs still want to employ these fresh hands. What's responsible for this imbalance of supply and demand? Is it the quality of tertiary institutions, for instance, or the quality of education that failed to shape the graduates as well?
Okay, so now we're going into layers of the issue around curriculum. First of all, so like I mentioned earlier, the curriculum is not very relevant for industry, and then again, for young graduates who come out of school, they are not very visible, right? In terms of knowing those jobs that are available, and at the same time, job listings for employers is not also it's not so visible to job seekers. So there are, graduates out there who are good, who are capable, but, the visibility of job seekers and the visibility of job listings is another area where, gaps need to be closed. And that's where Jobberman plays a huge role in connecting employers to job seekers and, creating value for their business, helping to create value for their businesses.
What workplace skills are considered most important for job seekers to have when they are being interviewed for roles?
Okay, so it's a mix of technical abilities and soft skills as well as digital skills. But more and more from our work, we are finding that employers are paying a little bit more attention to a combination of mindset, skills, and abilities. And the emphasis here is on soft skills. Employers are looking for young people who are able to, think critically, manage complex projects and situations at the same time, are able to problem solve on their feet, are able to communicate effectively, and also demonstrate confidence and leadership. These are the kinds of competencies we are finding that employers are beginning to emphasize. But unfortunately, many of these skills are not mainstreamed within the curriculum in our universities.
Now, talking about the Nigerian universities now, between the Nigerian universities, employers and employees, who should be closing the skills gap and how?
Okay, so I'll say two things. First of all, closing the skills gap. There's a role for private sector. Right, there's a role for private sector, and Jobberman, is at the front line of this, and we're providing competence-based
assessments, both for technical skills and soft skills, to help young people, become ready for the workplace. But the second thing I would also say is that everybody has a responsibility, right? Government, academia, private sector, everyone has a responsibility here. So I look forward to a world, where there's an integrated approach and everyone working together to ensure that our curriculum is relevant for the workplace. The dynamics of the workplace is changing really fast. Industry is changing really fast. AI, machine learning, and many of the jobs that will be available in the future are going to be automated. So we need to make our curriculum effective and relevant so that young people now and in the future can find jobs, and employers can also find talent to move their organizations towards productivity.
And as we seek to find those talents now, where does the government come in here, and what can the Nigerian Universities Commission do differently?
So what government and the Nigerian Universities Commission can do differently is, first of all, reach out to industry. Because industry, they're the ones, taking up this talent from the universities. And so that conversation between government, universities, and industry needs to happen. When that collaboration happens, then there's it facilitates an understanding about, the changing dynamics of the workplace and how the universities now need to begin to rethink and retool their universities to become, so that their students and talent become relevant for industry. Otherwise, we still have big problems in our hands.
But we've seen how the pandemic has led to job cuts and pay cuts. Tell us, how well can proper workplace skills secure an average employee from being fired?
Okay, so for a regular employee in the workplace, there's a need to begin to upskill themselves in two key areas, in the soft skills and also in their digital skills abilities. And I'm glad to say here that Jobberman is currently providing free soft skills training and free soft skills as competence assessments to young for employees who want to upskill themselves in this area, right? And in the second area, we're also providing digital skills to close the skills gap. And this is another area where job seekers and employees need to begin to pay attention to. Now we're in the new normal. Everybody's working from home, and this requires that more and more we are using tech tools to be able to work as a team and also provide deliver on the job. And so technical and digital skills are now very important for employees, and so they need to begin to pay attention to these things.
All right. Just recently, we saw hundreds of employees of airlines lose their jobs, of course, due to the COVID-19 pandemic. And considering the magnitude of the pandemic on the economy and organizations now, how do we get to strike a balance between skilled talent retention and existing issues of firms? Okay, so skills.
So first of all, employers will need to rethink their businesses and how they are, engaging their customers, right? And so businesses will need to now, think about new ways to engage their customers online and also begin to study and understand how their customers are changing, right? And so for an employee who wants to be relevant in the workplace today, he or she must also be thinking in this direction so that they can, effectively provide value for clients and so that their business can also remain relevant within this period of the pandemic.
But now that employers are in need of world-class and highly skilled workforce, what are the alternatives to secure qualified candidates?
Okay, so the alternative now is to provide, tools to help job seekers and employees to, to stay and remain relevant. For instance, they want to do they want to take trainings and courses in soft skills to develop their competencies in that area. I think that's very key right now. They also want to take courses to improve their digital abilities as well as their technical abilities. And also for employers who are seeking to bring in fresh and young talent, they might want to also think about rethink how they are recruiting in terms of providing, first of all, competence-based tests and also soft skills tests or assessments to be sure of the candidates they are bringing into their organizations. And Jobberman is in the forefront of this, providing this competence and soft skills assessments for job seekers as well as employees.
Now, just before you go, Mr. Balogun, there are quite a number of social investment schemes that the government has put in place, of course, the likes of the Empowers and all. Can such initiatives serve as a springboard for skilled workers?
Absolutely, it can. And, at the moment, we're also working with, state governments in pockets of the country, in Lagos, Kano, and Kaduna, to help provide soft skills training to the Empower candidates. And I think that the integration, and that's the integration I'm talking about, and collaboration with government to help provide additional skills to tool and retool our young graduates so that they are relevant for the workplace.
Monitoring and evaluation specialist at Jobberman Nigeria, Olufemi Balogun, thanks for speaking with us on the program.
Thank you very much.
All right, let's get more analysis of yesterday's activities at the Nigerian equities market with Odilim Enwegbara. Good morning, Eddie. Of course, I already took some of the numbers, but let's have the rest of the figures from you.
Good morning, BC. Well, we had a third straight gain for equities yesterday as the all-share index rose 0.31%, just like you said, to 24,841.94 points. Now, that was largely driven by gains from Nigerian breweries, some of the Tier 1 banking stocks, and Seplat. As a result of that, those positive sentiments drove the month-to-date gain to 0.6%, while year-to-date loss moderated to minus 7.5%. Volume, value, and deals traded yesterday were lower as we saw 154.46 million units worth 1.45 billion naira traded in over 4,222 deals. Now, the sectoral performance was broadly positive yesterday as all the sectors we tracked gained, apart from the industrial goods sector, which was down marginally by 0.03%. But to talk more about the market with me is Charles Fakoga, the chief dealer at Citico Trust and Investment Company. Good morning, Mr. Fakoga. Thank you for joining us on the program.
Yeah, good morning. Thank you for having me.
One of the market drivers yesterday was Nigerian breweries. Any idea what drove sentiment for that stock?
Yeah, thank you very much. You will see that in any market, there is constant buying and selling. And that frequent buying and selling, of course, prices are bound to go up and come down. So what we saw for Nigerian breweries yesterday was just a little re-interest of that security by investors yesterday. Nigerian breweries have strong fundamentals. So at any point in time, despite economic issues, despite the pandemic, people want to continue to have that security in their portfolio. So the renewed interest in Nigerian breweries was as a result of investors trying to take position in that equity.
Okay, so it's midweek trading already. What are your expectations for today, and what is your outlook for the rest of the week?
Well, our market has started, trading has started today. I see a little sampling of the market. I'm seeing traders being very cautious right now. But at the end of the day, I'm seeing the market is going to maintain the momentum of yesterday, and it will close obviously positive. For the rest of the week, yes, I see a slight improvement in what we have so far during the week.
Okay, Mr. Fakoga, thank you for your input on the program. Charles Fakoga is a chief dealer at Citico Trust and Investment. Now, just to run through some of these numbers, the oil and gas sector was positive as we saw gains and losses on that counter. There was some bargain hunting at the unlisted securities market yesterday as investors took advantage of the lower price stock. And as a result of that, the NSI rose 0.88% to 705.48 points, while the market cap was at 518.22 billion naira. The activity level was fair yesterday. We saw about 109,694 units worth 4.13 million naira, all traded in 9 deals. We'll have to, pause now on the market review. I will continue later. Over to you, BC.
Absolutely. We'll be back to tell us about the debt and currencies market in just a bit. Plus, we'll get to know what major headlines are driving the markets in the UK in just a moment. Do stay with us. Let's head to London now to know what's driving the markets this morning with Juliana Olayinka. Good morning, Juliana. Virgin Atlantic couldn't help it anymore and has declared itself bankrupt and is seeking protection from creditors in the U.S. Of course, Virgin Atlantic had announced that it had secured funding to survive for another 18 months. So what has happened now?
Good morning, Bissy. Well, this is just the latest episode for the crisis-hit airline ever since the COVID pandemic has hit the aviation industry. Virgin Atlantic is mainly owned by the British billionaire Richard Branson, and very early on in the year, when they decided to ground all of their fleet in April, Richard Branson was one of the biggest companies trying to seek some sort of financial assistance from the British government in one of their very varied coronavirus loan schemes. That was rejected. Rishi Sunak believed that there was enough in their coffers for them to sort it out properly. Richard Branson also tried to get money for Virgin Australia from the Australian government. They also rejected it. But last month, we learned that Virgin Atlantic managed to raise £1.2 billion from private investors. 200 million of that pound came from the Virgin Atlantic group, and part of that group involves Delta Airlines. Now, from what I believe and from what I've read is that part of this bankruptcy in the US is to secure that private investment, that what they need to do is assure that their assets in the US are protected so that they can try and strike out some sort of long-term deal. A lot of this information was thrashed out yesterday in a British High Court. I'll read some of the extracts from David Allison, who's the QC representing Virgin Atlantic. He told the courts that without a solvent recapitalisation, including an injection of new money, Virgin Atlantic's directors would have no choice but to place the company into administration in mid-September 2020 in order to wind down the business and sell any assets where possible. So I do believe that at the moment, this protection order that they're doing through the US courts is merely a tick box operation to make sure they can secure this £1.2 billion. It's Chapter 15 of the US Bankruptcy Code. And basically, they'll be able to get debt off their balance sheet and position the company for sustainable long-term growth. Now, on this show, we did discuss a couple of months ago about Virgin Australia and it going into administration. It's managed to get itself out of administration. 3,000 jobs were axed in Virgin Australia, but now it's being owned or being run by a US private equity firm company. And of course, Richard Branson is hoping that by going through this bankruptcy in the US courts, he'll be able to save the assets that they've got. I said they stopped flying in April. They just started some of their long-haul flights last month. They will no longer be operating, well, for the foreseeable future, out of Gatwick, which is Britain's second largest airport, because we know that the airline industry has basically collapsed during COVID. Virgin Atlantic are not the only airline to be going through such issues. British Airways have said they'll be axing 12,000 jobs. EasyJet, Ryanair have said that they'll be axing thousands of jobs, and they're trying to renegotiate with pilots and cabin crew. So this is a long-standing issue. We're not expecting pre-COVID passenger numbers for at least 3 or 4 years. And again, this is just the latest in quite a long episode involving Sir Richard Branson and questions about whether or not he should be or shouldn't be getting bailouts when he's a very wealthy individual indeed. But from what I'm hearing, it appears as if what's happened in America is just to safe shore his assets, and so the company can build and maintain some sort of sustainable growth to get themselves out of this COVID-19 pandemic that the entire industry is facing.
All right, Juliana. Now, yesterday we talked about BP's earnings, but today the company is still in the news. It has unveiled new plans to shift away from fossil fuels and towards low-carbon energy within the next decade. And despite reporting one of its worst quarterly results on records, its share price bounced on Tuesday. Any details on how the company plans to achieve this, and what's the share price doing this morning? Or how's the share price doing this morning?
Yeah, I'm not privy to all of the details, but certainly it appears as if, some people believe that BP are finally getting it right. They're finally turning it around. This morning, their shares are up about 4.5% yesterday, even though they reported a £5.2 billion quarterly loss, which is eye-watering. Their shares were up 8.5%. And I think it's because finally it appears as if under their new chief executive, Bernard Looney, this transition from being pretty dirty oil major company, they're now transitioning into being an oil and energy company that is really committed to reaching these net zero emissions targets, I believe, by 2050. So they did also yesterday cut dividends to shareholders. They're not the only oil major to do so. Their rivals, Royal Dutch Shell, have also cut their dividends to shareholders by a third. This is the first time in 10 years that BP have ever done this, and it comes amidst a major discussion about the sustainability of these massive amounts they're giving to shareholders, particularly as, oil is going through a transition of its own. Its prices were reached a 25-year low this year. There's too much of it, and of course the pandemic hasn't helped at all. With their statement yesterday of how much they had lost, they also pledged to cut oil and gas production by 40%, which appears to have really pleased shareholders there. They also said that they're ramping up clean energy technology tenfold by the end of the decade. And I told you Bernard Looney, their new chief exec, who came in earlier this year, he's really on a drive to change and transform the impression of the company. He said in a statement that the new strategy that they're seeking to adhere provided a comprehensive and coherent approach to delivering the net zero ambition first unveiled by the company in February. So for some people, BP are finally getting it right.
All right, Juliana, we'll see you again in the afternoon. Well, let's get back to Eddie Young for a review of the debt and currencies markets. Over to you, Eddie.
Thank you, BC. Well, the bond market was bearish yesterday as average yields declined by 30 basis points. We saw some sell-offs on the July 2034 bond. We had 27 deals worth 7 billion naira on that counter. There was more activity at the Treasury bills market. The market was bullish as yields declined yesterday by 8 basis points. We had 23 deals worth 8.98 million naira. The Omo Bills market closed on a positive note yesterday with yields declining by 32 basis points. In all, we had 31 deals worth 96.69 billion naira. But to talk more about the fixed income market is Choma Udu, a fixed income dealer at GT Bank. Good morning, Choma. Thank you for joining us on the program.
Thank you for having me.
Should we be expecting increased demand for Nigerian Treasury bills this week due to unmet bids at last week's primary market auction?
We should, actually. There's a lot of liquidity in the market. The money market opened at about 250 billion long, and they traded at 9% in that space. And because of the liquidity in the market and the bearish sentiment we've seen across the curve, we expect that yields will improve, and then we expect that investors will take advantage of the improved yield and get bargain buys in the market.
Okay, but how do you think sentiment will be at the bond market for the rest of the week?
Well, we've already seen a lot of pockets of trades tilted to some buys from investors that have liquidity in the market. But those trades have been upturned by profit takers from the other side. So the market is swinging in both ways.
All right, Choma, thank you for your input on the program. Choma Udu is a fixed income dealer at GT Bank. Well, BC, as Charles Fakruga said, he's expecting a positive trading day. So I'll join him in his hopes and we'll keep our fingers crossed.
We will always keep hope alive. And of course, everyone wants a positive trading day. Thank you, Edidiang. We'll see you tomorrow. And that's our show today. Thank you for watching. I am BC Adebayo.